Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. We're actually in season 3 of real-life mortgage solutions, and today we're going to talk about some of the things that nobody ever wants to talk about. You've heard about all the other insurances, your mortgage default insurance, which is protecting the bank from you, your home insurance, of course, then there's title insurance. But today we're going to talk about probably what I consider to be the most important, the one that actually protects your investment, and that's life and disability insurance. Over the years of being in this industry, we have gone back and forth. We have been with a couple of other insuring companies, but in the end, we always end up back with MPP. So Mortgage Protection Plan, owned and operated by Manulife. And my guest today is Bart Paterson, Business Development Manager, Manulife Mortgage Protection, Alberta and Saskatchewan. Welcome to the show.
Thank you very much, Len. I appreciate it. This is a great opportunity.
So talk about MPP, Mortgage Protection Plan. What is it and how does it differ from other insurances that a client would come across?
It's a great opening question because I think when brokers do meet with clients, they're coming to the broker for advice. And when they choose a broker, they have trust in that broker and ensure that the broker will look out for their best interests and provide them the product that fits their family and their needs, right? And quite often, I think with brokers, it's important to get the right product for the client, first off, but also mitigate the risk of these clients taking on this new debt. And you mentioned that there's different types of insurance. And when we mention the word insurance, yeah, there's default insurance, there's home and auto, there's title insurance. But what MPP is really, it stands for Mortgage Protection Plan, and it is protection of your mortgage debt that you're taking on. And so I think it's really important for clients to know what insurance is protecting what. And to your point earlier, default insurance is generally for clients that have 20% less or 20% down or less, and it protects the client or protects the banks. MPP insurance for life and disability, it protects the client's debt that they're taking on. So that's really the big difference. And this is optional, but also looking at when you're having those conversations with the clients, it's good intention to find out, hey, what type of insurance do you have, right?
So what are some of the stats to consider about why you need life insurance and disability insurance?
Well, we're starting to see more and more, like with cancer, 1 in 2 Canadians will come down with some sort of cancer in their lifetime, which is alarming. And we also know that for disability, the average number of months people are off work is approximately 10 months. And so we know that the average savings that people have across Canada in their bank account right now is around $3,800. So how long will that actually last over 10 months if you're unable to provide an income, right? Because you're off on disability. In fact, 56% of clients that do go on disability, they go back to work early, even though they may not be healthy, because of financial reasons. And we also know that 33% of Canadians will go on mental health disability at one time as well. And we see actual claims with Manulife. Within the first 2 years, we see 44% of those clients making claims.
Really?
Yeah.
That's a huge number, right?
Yeah.
I didn't realize it was that high. And it's funny to say, if you say $3,800 in savings, in today's age and the amount of mortgages that people carry and stuff, that's 1 month. That's not anywhere near 10, right?
Yeah. And so we also hear, I have insurance through my employer. Right. That's the other one, another one that we say, okay, but do you really know what that looks like?
Yeah.
And so you have to dig a little bit deeper. And then what happens if you change employers?
Exactly. And that's one of the biggest ones. I'm sure to a lot of young first-time home buyers, and they all say that. But a very good example of one of my clients who skidooing on the Athabasca River in Fort McMurray, hit a sand dune under the snow and flipped his snowmobile, probably at about way over what he should have been doing, but probably 60 or 70 miles an hour, right? Big machines these days. 26, 27 years old, licensed bodyman, broke a hip.
Yeah.
So you spend your whole day bent over as a bodyman, right?
Yeah.
And he was off for a long time. He was off probably well over a year and a half. But it was, and his first call, of course, was to me that I take the coverage, and they hadn't because he had at work. But someone who was probably a mid 150 to 175 income because of overtime, his 65% of coverage wasn't on that. It was on the $70,000 base, right? So
exactly.
People don't realize that even if you can't live on 65% of that if you have mortgages and children and things to pay, right? For sure.
Absolutely. And that also includes on the life through an employer. It's generally speaking, it's 1 or 2 times your base salary.
Yeah, two is the outside. It's usually 1 or 1.5, right? So,
and so if you consider, if you have family, if you have kids, after funeral costs, after your day-to-day expenses, if you pay for education for kids, how quickly that'll go.
very quickly, especially during university, right? So we start this conversation with the client sometimes at the end, sometimes at the beginning, but really what is considered to be the best time to start to talk about the insurance?
I think for most brokers, it's really important at that stage where you're collecting documents. It's really important to have the discussion around what type of insurance do you currently have? Because maybe people do have term, life, or whole, like there's whole, universal.
Yeah.
There's many different types of insurance out there. And I think it's fair for brokers to ask, how much insurance do you carry right now? For example, if you had a $500,000 term policy, I would say, hey, that's great, but let's look at the debt you're taking on now. So, in the event of a life incident, if you were to get that paid out, what do most people do? Do they pay down their debt? So those are kind of the questions that we want to ask up front. And just again, the reason for asking that is really, we want to mitigate the risk that clients are taking on by this new debt and having just an open conversation about it.
That's probably the biggest thing, is getting it out front of the questions, because it's by the time everything else is happening with the mortgage and buying a house and doing all the real estate stuff, there's some things that get set aside. So benefits and features. So what are some of the definite benefits to this? So you mentioned a few of them already. Not realizing that myself, until about a year and a half ago or 2 years ago, in a conversation, that being diagnosed with cancer and have to go on treatment is considered a disability. And we had a client not long ago actually make a claim because of that. So what are some of the other benefits, I guess? And
I think the most common ones, and the one that really makes it unique to the industry, is this product is portable. So it goes from lender to lender and property to property. In this industry, there is lots of big major banks, the lawyers' offices are all offering some type of creditor insurance. It's important to know that most of those are not transferable. So if you are in a situation where your health has changed during a period where you have taken out creditor insurance and your broker has found you a better mortgage product somewhere else, you may not be able to transfer that insurance over because of health reasons. And so it's really important to, especially if you're younger, this is a great product for anybody that's young, because it does transfer from lender to lender and property to property.
right. And maybe we can explain then to them, you have term insurance. Term insurance comes up every 5, 10, 20 years, I guess, right?
Yeah,
But at the end of that term, what happens to rates and coverage at that point?
exactly. And if your health changes, so your premiums will generally go up as you age.
Right.
With MPP, your premiums stay the same. And what we do is your premiums are amortized over 25 years or over the lifetime of it, as long as you have that mortgage.
Okay.
And we quite often hear, well, I'm paying premiums on a depreciating balance. Yeah, that might be true, but you are also looking at that premium never changing. So if you get to a point where you only owe 100,000 on your mortgage, you have the opportunity, if you want, I don't always recommend it, but you can cancel at any time.
Right.
Right.
And I actually hold a restricted license, obviously, for MPP. And at one point, I held all the insurance licenses many years ago.
Yeah.
But it's like people don't realize it's either one of two things. Maybe if you take a 25-year term, I don't know how easy they are to get these days, but even at the end of that, if you have to requalify 25 years down the road, if I got mine at 25 and had to requalify at 25, I had a heart attack at 48. So
Yeah.
there is no next premium after that had I had that type of insurance, right? But that's one of the things, I guess insurance does one of two things. It stays the same and reduces the amount that you get paid, or vice versa, right? The payment goes up as the years go on.
And I think both really complement each other. So if a young couple does have term insurance, I really think that the term insurance is really intended for their surviving spouse to live from, right?
Right.
And the idea behind MPP is really it's mortgage protection. So it pays off the debt. And with disability, it pays your monthly mortgage payment while you're off getting healthy.
Right.
And I think those are the two things that really, I wouldn't say one's better than the other. I think they complement each other really well.
Yeah. And I think that's one thing that people don't realize, though. That is the whole idea that, the life insurance you have already is for life to go on for your survivors. The debt coverage is to help them go on even better as if they're debt free, of course, right? So what if I have some coverage already and I don't think I need the full, our average mortgage is about $400,000. So what kind of coverage can I get then if I don't want to cover the whole debt?
So we offer what's called, and this product came out as a request from brokers in the industry. We have a broker council that over a year ago suggested that we come up with a product that would, in some parts of Canada and Ontario, BC, we see mortgages that exceed $1 million. Right. And so we introduced a product called partial coverage. It's available where maximum life insurance that you can have in Canada with Manulife MPP is $1 million. So in Ontario and BC, if you have a property where you have a $200 million mortgage, it does happen.
Sorry, I gagged a little bit.
But if you did have a $200,000 or $2 million mortgage, the maximum we would offer is 50% of that, which is $1 million coverage, right? So it does give you some protection versus no protection at all.
Right. Yeah. And then maybe there's a top up then if they do have other term insurances, they make up some of that. Hard to get $1 million policy, I would think, even for just regular term insurance. Maybe not as common as you would think or as easy to get. I'm sure they're going to want you jumping through some hoops for that to happen, right?
Yeah. No, absolutely. It's quite expensive. And I think when brokers are having this discussion with clients, one of the things I used to do when I was a broker was ask my clients, what's your greatest asset? Right? What do most people think? Hey, it's my home.
It's your house.
Right? I live in it. I can walk in. I can relax in it. I can enjoy it. But in actuality, it's your greatest liability until it's paid off.
Yeah, true.
Right? And so we kind of look at, okay, here's your assets and liabilities page. Well, you're taking on this new debt, but your greatest asset is actually your ability to earn income.
True.
And what would your life look like if your spouse or you were unable to earn the income you do today in the event something happens, whether it's a disability or if, heaven forbid, someone passes? How will I take care of my mortgage? How will I take care of my family?
Right, exactly. Yeah, and that kind of brings around to that question. So what is the client's why, right? And I think that's important for new brokers to kind of put that thought, I guess, out there into into words and say, okay, so what happens if, why would you not insure is another question. I'm going like, especially for the younger people, you're under 40 and it's your first house and you're just starting a family. Insurance in those days, I carried a lot of insurance actually,
Yeah.
right? So, but now they're all grown, they all have their own houses, they all make good money. So I just Margaret myself. So keep her happy after.
And I think it's important to bring it up. Like we talked about bringing it up at the beginning, but also when you do the submission to the lender, again, say, we can do what's called a quick quote. So we can provide, if a client comes to us and says, I have my monthly mortgage amount that I can afford right now is $3,000. Well, we can include this premium into that 3,000. So it's actually built in when we're doing pre-approval. So when the client does find the property and it's been approved, we can go, hey, Mr. and Mrs. Client, here's your $3,000 monthly payment. Included is the insurance. So then there's less pushback on the cost of it because it's already built into your monthly payment.
Right. And that's where the banks are so good at it, I think, is that they basically call that a insured payment, right? So
Right.
Your taxes are there, your property taxes are built into it, your monthly PI, this is where the PIT comes in. And then, of course, an insurance payment included into that. It gives them a better sense, I think, for their budget. If it's $3,000, then we can probably come in under lower that with most of our average mortgages, including that extra payment, right? So
yeah. And what's nice about doing it that way is, again, we've talked about it. It's now included in the monthly payment. Another feature that we offer is a 60-day guarantee.
Right.
And what we mean by that is the first 30 days of insurance is free and we'll collect 1 month's premiums. And then if gives the client quite a few brokers will say, here, based on at the beginning of our conversation, I know how much insurance you have. Based on what I see, take this insurance now. If you can find a better product, and in 60 days, you want to cancel this, you'll get your premium back. Your hands are clean.
Right.
There you go. But most people that do take this insurance and understand that it protects them will keep this in place.
Yeah, exactly. Right. So, and simple to do that within our system, of course, to get that quick quote in place. It's built right into Velocity. So you can have that number well in advance of that final conversation when you're just trying to sign off the papers and move on to the next thing. Right. So,
Yeah.
So what does it mean to be indemnified?
Indemnification, and Manulife is the only insurance company that will indemnify the brokers. And what we mean by that is, in the event a client comes back and says, Mr. Broker didn't talk to me about insurance, I'm going to sue you, the broker, and I'm going to sue Manulife. And this has happened. We do get cases from time to time. But as a broker, we have an obligation to clients to mitigate the risk that they're taking on. That's our job. And as advisors, it's best that we talk about this product. As long as you're doing that, we will indemnify you in the case of if there is ever a lawsuit that comes up.
But that only comes if they actually waive the coverage, right?
Correct.
So, and I've had a few agents of late who started and said, well, we talked to them about it. I'm going like, well, first off, you're not licensed to talk about insurance.
Yeah.
You're a mortgage broker. And that's why we have this form. And I'm big on using the links. And here, my spiel to go with that is I'm required by law to offer you life and disability insurance on your mortgage. Regardless of your decision, I do need you to complete this before you remove condition.
Yeah.
Right. So condition of finance, if you remove condition of finance, and this has probably happened more times than we can probably know about, if something happens to the client between removal of conditions and actually possession of the house, their estate becomes responsible for finishing the purchase of the house. If it was insured, of course, right from signing of that to removing conditions, that would take that ease off the estate. Probably take a little while for the process to happen, but it would definitely save some major issues, I think, that people don't realize exist out there for them, right? So,
Yeah.
yeah,
And that's a great point because we have seen cases where people haven't even taken possession. They've applied. So the moment you apply or we receive the application, if they applied, they're automatically approved for accidental life and disability, which is lower amount
right. Yeah,
until it's fully underwritten. And what I mean by fully underwritten is it takes 4 to 5 business days for our underwriters to reach out to the client and go through the health questions if there's any concerns.
right.
But once it's fully underwritten, then there's full coverage. And that stays the same for the life of that mortgage. The premiums never change.
Right, exactly. Right.
Uh,
Yeah, no, that's a great point. Lots of stories over the years, of course, of what's happened to clients and who had and didn't have. The only calls they ever get is when they didn't have, I think,
yeah.
unfortunately. But
Yeah.
I had seen it where client had refinanced their house, a little older gentleman to help his almost spouse, his girlfriend, I guess,
Yeah.
right? Buy
Yeah.
set up a salon, right? So they used the money for that. Fortunately, he had an accident and on his motorbike passed away. And that whole mindset of, okay, it's $500. Well, the business should have been able to pay the $500 and cover that insurance is how I saw it should have been, but that's
Right.
not how they saw it, right? So lots of scenarios for sure of within the team. And lately clients diagnosed with cancer, having to go on chemo for several months, right?
Yeah.
Able to
Yeah.
claim it under as a disability is an excellent feature that I know that everybody goes, well, you don't have, what's the other one called? There's a
Critical.
critical
Yeah.
illness, right?
Yeah.
So different again, but one way or the other, you end up being disabled, whether it's partially or for how long is always a question, of course, right?
Yeah.
So, yeah.
Absolutely. And the one other thing I'd like to just bring up too is we do hear the objections.
Right.
So there's really 3 objections at top of mind. The first one is it's too expensive. How many times do you go to Tim Hortons or to Starbucks a week, right? I see
Not
this
many
quite often.
anymore.
Well, I
Starbucks,
think more
especially.
people go to Tim Hortons now than Starbucks, maybe. I don't know.
Yeah.
But it's also if you go out for dinner 2 or 3 times a month,
Yeah.
you know, the cost of dinner for two, we can average $100 easily.
So,
And so we want to just kind of put it into perspective for peace of mind that you're covered in the event something happens.
yeah.
It's really important to talk about that and the cost of it versus even if you have auto insurance, you look at the cost of auto insurance. This is most cases, this is a larger debt and the premiums are a lot less.
Yeah.
So
No.
it's kind of,
Yeah. When you think about your car insurance, I think mine is about $2,600 a year
yeah,
with zero things on my bureau for years or on my driver's license. So it's like $200 a month, two and a
yeah,
quarter, something like that. So it's like,
yeah,
and it's a $60,000 car. It's not a
yeah.
$600,000 house. So that's a good comparison to use because
Yeah.
there's a lot of young guys paying a lot more than that. I know my son at one time paid big dollars for being young, for having issues. But that's a good way to kind of
Well,
look at it.
it's funny. I was out at the airport the other day and I go, okay, I know where I am. Like you look in the parking lot, there's trucks
Oh,
everywhere.
yeah.
And they
Yeah.
are not cheap trucks. I can
Well,
tell you
no,
that.
no, there's hardly a pickup anymore. That's a basic pickup is probably 70 or 80,000
Yeah.
easily.
So,
My
yeah.
son's Denali, when he sold it, he got 80,000 for it when it was 5 years old and full of dog hair. And
Yeah.
but now that same truck to go buy it, it's probably 100 and a quarter.
Yeah. And I don't think they're going to come down in price. So it's,
Well, if
uh,
tariffs hit,
and
it'll go up to 25%, and
yeah.
they said $12,000 on that average car. So,
uh,
and imagine
yeah.
what the pickups and stuff will be like. So, but anyways,
So you
well,
know that the insurance companies are thinking about that now too, right? And it's,
oh, definitely right. So,
yeah.
yeah. So,
Yeah. And the second one that we hear quite often too is I have insurance through my employer, and you and I talked about this earlier. I think the one big thing to think of though is if I change employers, no, that doesn't go with you. That's the big thing.
yeah,
The other thing too that we're seeing with employers to cut costs is now they're contracting people, right? So they don't have to pay the benefits.
yeah,
So we have life and disability. If you're self-employed, these products are standalone. So if you become self-employed, please investigate the disability.
Yeah.
I encourage any broker that's having a conversation with self-employed or business for self, please talk about the disability.
Right. Yeah. And we see a lot of people who became, were carpenters working for somebody else who went out on their own to do renovations and stuff like that. So definitely nothing to back them up if they're unable to go to work. Right. So
Yeah, absolutely.
Yeah, good point.
And the last one is we've heard this before where term insurance is termed better than mortgage protection. And again, we've addressed this. I think the two complement each other. I think when it comes to term insurance or whole life or universal, that's really intended for the surviving spouse to live.
Yeah.
The MPP mortgage protection is to protect the debt that you've taken on. And that's all. And that's at the end of the day, we just want to ensure that people have the option anyway.
Right.
That if it's presented and they can make their decision based on the information provided to them.
Right. And the other point in that the disability also pays your property taxes.
Correct.
I think
Correct.
is one that people miss. Even if you're not paying your property taxes, majority of the people that I think our clients put it on just on a monthly payment one way or the other, whether that's with the lender themselves or directly with the municipalities. It doesn't take long to get too far behind on your property taxes, and the city will come looking to lien your property or do something to make sure they get paid, right? So,
taxes and what's the other one? Taxes and death, right?
Yeah, taxes.
I hate to say it, but
it's insurance.
It's the tax man gets their slice first.
That's right. Yeah. So always good to have that covered as well. So anyways, Bart, I thank you for your time. That lots of great information, not only for the broker world, but for clients as well, to give them some idea of what that MPP program can do for them. Like you said, it's the biggest asset. And of course, disability is, like you said, more prevalent than people realize on a lot of different levels. So always good to make sure they have the right coverage. So
yeah, absolutely.
Okay. Well, thanks for your time.
Okay. Thanks, Len. I appreciate the opportunity. I appreciate it.
Talk to you soon. Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.